This is Barry Zalma speaking for Claim School Incorporated with true crime stories of insurance fraud. Number 6, the case of the Art Flambé. When a person decides to perpetrate an insurance fraud, he pushes the pause button on his morality. His plan to commit the fraud will then become so flamboyant and creative that even the most innocent of claims adjusters will detect the crime. Such was the case of a Belgian immigrant. He came to the United States shortly after World War II. He eked out a living with various jobs as a low-paid engineering draftsman. Before he decided to change his career and try arson for profit, he had led a dull but exemplary life. He, at the age of 60, married his second wife. Later, they actually had a child, and when the child was 3, he contracted phlebitis and underwent several surgeries. He was unable to keep up with his work, and in any event, the aerospace industry had just lost several major contracts. He lost his job. Unemployment compensation did not pay enough for him to make the $1,400 a month mortgage payments on his small 3-bedroom house in Cerritos, California. His lender foreclosed. After the foreclosure sale had occurred, he was still living in the house awaiting eviction. His homeowner's policy was still in effect. He no longer had an interest in the house and was subject to an immediate eviction. The insured recruited his 16-year-old son from his first marriage to set fire to the house. He made certain that when the fire occurred, he, his wife, and young daughter were away visiting relatives in Victorville. The house, with the assistance of much gasoline, burned to the foundation. Much to his surprise, he was not an insurance scholar, the insurance company immediately denied his claim for the loss of the structure. He did not know that he must, at the time of the fire, have an interest in the structure to collect indemnity. The mortgagee, now the owner, received full payment. He had $100,000 in contents coverage, not subject to the mortgage, and needed to collect it all to survive. Of course, because the Belgians' extended illness and lack of income, the house had relatively threadbare and simple furniture and furnishings. He needed to bring the values up somehow to obtain a policy limits payment. He prepared an inventory of all his household furniture and furnishings, and added to the list an original oil painting by Rembrandt, an original oil painting by Pablo Picasso, and an original oil painting by Vincent van Gogh. The adjuster was surprised that anyone who owned such valuable artwork had difficulty making a $1,400 a month payment to his mortgage company. The adjuster could not understand how the insured could allow his house to go by foreclosure. The adjuster brought the claim to the insurer's special investigative unit that existed to investigate potential fraud, and the SIU retained an art expert and retained counsel to examine the insured under oath. Under oath, the insured's testimony established that the insured had attempted to perpetrate a fraud on his insurer. The insured testified that he was of royal birth, his father being a baron in Belgium. The baron lived in a castle outside of Antwerp, having earned his fortune in the diamond trade. The baron, pleased to learn that he had become a grandfather again, brought his son, daughter-in-law, and new granddaughter to visit him at the castle. They spent a month at the castle enjoying the generosity of the baron. Before the insured left, the baron pointed to 3 oil paintings on the castle wall and told his son to take them home. Grandfather the Baron made the paintings a gift in honor of the birth of his new granddaughter. The insured testified he took the oils out of their frames, rolled them up, and placed the 3 in a shipping tube, which he hand-carried back to the United States. Since they were gifts, he did not report them to U.S. Customs. He had no written record of his ownership or possession of the paintings. He described the Rembrandt as a dark painting of people sitting around a table with a bright point of light. When asked to describe the painting by Van Gogh, the insured testified another Dutchman. The painting was in the same style. Of course, counsel, not an art expert, knew that although Rembrandt painted in very dark colors, Van Gogh, however, painted in wild, bright, and exuberant color schemes. A dark and brooding painting like that of Rembrandt never came off of Van Gogh's brush. Further, counsel knew, after consulting with the art expert, that Rembrandt painted most of his works on board, planks of wood. It was therefore impossible to roll it up and put it in a tube. The expert explained that if the insured had one of Rembrandt's rare canvases and had rolled it up and placed it in a tube, when he arrived home in Cerritos, he would have found a clean canvas and a pile of paint chips at the bottom of the tube. Old paint, old varnish does not suffer being rolled up. The insured tried to help the insurer's investigation. He provided a photograph of a family dinner where the Rembrandt was visible in the background. The insured identified the photograph as depicting the original Rembrandt oil painting in its background. Counsel for the insurer had the photograph enhanced and enlarged. The enlargement showed that the single bright point of light described by the insured was cast by a painting of an electric light bulb. Of course, Tom Edison had not been born when Rembrandt was painting and would not be born for at least 200 or 300 more years. To the surprise of the insured, the insurer rejected the claim presented by the insured for fraud, false swearing, and material misrepresentation of fact. The insured found a lawyer willing to sue the insurer on a contingency fee with no money out of pocket by the insured. Suit was filed for breach of contract and breach of the covenant of good faith and fair dealing. Although the fraud was obvious and blatant, the cost of defense of the bad faith action mounted. The suit dragged on for 3 years. Trial counsel for the insurer were unable to convince a court to grant summary judgment, but were convinced because of the obvious nature of the fraud that a jury of his peers would grant judgment in favor of the insurer. The insurer and the Belgian were required by law to attend a mandatory settlement conference. And at that conference before the judge, who warned the insurer of the danger of a punitive damages award, caused the lawsuit to settle for the payment by the insurer of $30,000, a payment made against the wishes of defense counsel, who, regardless, admitted he would be compelled to charge more than $30,000 to take the case through trial. There is no question that the settlement was an appropriate economic decision if the insurer was only considering the single lawsuit. They were dealing with a plaintiff's lawyer they saw on a regular basis. They knew the quality of his work and that their trial lawyer was better and would 90 times out of 100 win before a jury. To pay that lawyer tribute as an economic decision was simply illogical. When a plaintiff's bad faith lawyer is paid $30,000 by an insurer for a lawsuit that any 3-year-old would know was a blatant fraud, he has been given an invitation to file more suits against the insurer regardless of the merits of the lawsuit. Paying a blatant fraud is tantamount to providing plaintiff's counsel with the key to the vault that holds the assets of the insurance company. The insurer, against its long-term interest, made a business decision that it was better to pay the criminal $30,000 than to pay its lawyer to defend its position at trial. The insurer that does so fools itself. It is not making a reasonable economic decision. It will pay in the future thousands of dollars because the plaintiff's bar knows the insurer will pay off rather than pay their lawyers to defend the most spurious of suits simply to avoid the off chance they might lose. More fraudulent claims and suits will, and in fact did, follow, some not as obvious, and the insurer found it more difficult to profit from the business of insurance. Thank you for your attention, and consider seeing more information about how to avoid the tort of bad faith and how to deter or defeat insurance fraud by reading my books on insurance fraud and bad faith, which are all available from Amazon.com. Thank you again for your attention.